Let's get started for this week's Pulver report and a little bit of a weekly recap. Actually, the week was pretty quick because a lot of our profits were booked on Tuesday. So let's chat about everything. Let's get into the risk disclaimer. We know there's risk in trading. Please always use trade capital only. Do not trade money you cannot afford to lose. Whether trading stocks, options, futures, forex, cryptos, you know the deal. Social media, this is the best place to find me. One quick announcement for anybody watching this video. Anybody that joins my Discord channel, if you get a direct message from, I'm putting air quotes around this, me, please make sure that you check with me. If you're on my Discord channel, my handle is Real Chris Pulver. If you're following me on Twitter, my handle is Real Chris Pulver. If you're following me on YouTube and I'm live, youtube.com/Chris Pulver. I've had probably 10 of my followers this week already report that there's a, dot Real Chris Pulver, Real Chris Pulver 1, Real Chris Pulver underscore, blah, blah, blah. Those are all scammers, and I'm sorry that happens, but please, 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 when those messages happen, block them, report them, flag them, and hopefully, the respective platforms admin will take care of that and help us. But I just want to make sure that nobody's engaging in, potential fraudulent conversations because that's ridiculous and it's annoying, but it's out there since, I've been doing this for a long time. And unfortunately, that's kind of the stupid reality I have to deal with. But again, you know where to find me. You can find me here. Ask me a live question in the chat. I'll probably acknowledge it during the live session. Come to my Discord channel. Ask me a question. You are talking to me directly. I will not direct message you first, probably ever. So if you want to reach out to me, you know how to find me. All right. All right. Sounds good. Okay. Let's go to workspace for the week. We're opening bells. It's 9:32 a.m. I want to talk about what we did. This actually all happened on Tuesday. I've got some trades running for the remainder of the day. I've got a total debit of $1.44. One of these trades more than likely will finish with profit. It's just a matter of which one. I would assume more than likely right now, based on where price is at, the SPY is right around 450. So this one has potential. If we have a drift up higher towards the 455 handle, this one has potential. And if we fall down to the gap around that 446 level, this one has potential. So there's still 3 trades that I think have a pretty good probability of getting paid out today, most likely between 3:15, 3:30 p.m. Eastern time before closing bell. I'm going to try to look at kind of a max profit. A lot of these pay decently. So this is a 6.25 to 1, 7 to 1, 10 to 1. If I'm right on any of these, this should help me make an extra maybe 40, 50 cents for the week. So we'll see what that shapes out to be. I mean, I can take basically 4 losses, have 1 winner, and it pays out net profit. But for the week so far, it's been pretty solid. We had just in some strangles here on my trade alerts. 224 plus $1.26, 668 in credit, and then we grabbed $2.61 on a long call on the IWM, which is the ETF for the Russell 2000. So over $9 credit this week. I also booked some profit on Costco. Everything in the portfolio has been doing pretty well. We did a lot of our management. We had probably 20 expirations for 11/17. We took care of a lot of those. On the Forex side, today the yen is doing some funny business where it's stronger. I still don't believe it, and I don't think that honestly, I don't really care. If you're, waiting and trying to trade the yen crosses, Godspeed, because it looks good today, but do I trust that this is going to go lower next week? We'll find out in the flex room. I mean, if this is down here and breaking major structure and it's doing it naturally, not with a flash crash, not with an intervention candle, I'm talking about actually closing below here and then actually having some type of bear flag and then pushing lower. That's a different story, right? We can trade that, but when it's overnight and it's flash down, flash down, flash down, flash down, those are ridiculous trades that I just am so annoyed with trying to trade anything yen wise unless you're just buying dips. So keep an eye on that for next week. And it's kind of that time where maybe with lower volume with the holidays, things could get a little bit interesting. We're coming back up to these previous highs at 152. The yen might turn over a little bit for this resistance to hold. And if it does, okay, fine. We can take some stabs at it. I'm probably going to lower my trade size by a third if I'm trading any JPY crosses, but there's lots of pip opportunities. If we're going to see aggressive yen strength, it should be coming pretty fast. And again, trade small because if we're wrong, you got to accept the stop loss. If you're also flipping this around where, we talked about this the last couple of weeks, the painful trade to the retail crowd is to be short the yen and the market just continues to go long the yen. Well, I flipped that around. The retail crowd is long the yen, meaning the retail crowd wants to short it. The institutional side, to make that painful, would just buy dips and buy dips and buy dips and buy dips. And everyone that has stop losses here, guess what happens? They get stopped out. And that kind of opens up this new liquidity. Who knows? But I have zero trust right now in the yen crosses. If we take it trading it next week, it's because it has to be looking way better with way more confirmation. But I wouldn't be surprised today. I'm just throwing this out there. By today, if this Japanese yen comes all the way back down here, I wouldn't be surprised. The Aussie's up here, the CAD's getting a little bit stronger. Everything else is pretty quiet, but the yen was kind of the outlier this morning. All right. Let me jump into YouTube and say good morning to everybody. All right. We got a nice little turnout this morning. Thank you very much. I love it. So Donna, first in the house. Good morning. Jacob, good morning. Catherine, good morning. Gary, what's happening, sir? Perry, David, Ruth. Nice to see you, Ruth Ann. Everett, good morning. Denise, good morning. Herschel, good morning. Jason, TGIF and D. Larry, good morning. Good morning and happy Friday. All right, nice to see everybody. Yeah, if you'd hit the thumbs up button for me, that would be super helpful. I'll ask again before we're wrapping up the session today. So, yen crosses, what have we been paying attention to the most? The dollar index. This looks like a nice bear flag as we get into holiday trading next week, which will be a la Thanksgiving. So we have 1, 2, 3 days of quote full-time trading, but I would check with your brokers. You might be getting an email. Perhaps there's limited hours of trading on Wednesday the 22nd. Wall Street and the U.S. markets will be closed. Banks are closed on Thursday. There will be forex brokers that are open. It might be limited trading hours. It certainly will be like lower volume, but holiday trading is not a bad thing. For the last probably 5 or 6 years, I've really embraced that some pretty sneaky money can be made during the holidays because what you see is what you get. And a lot of times you just have prices slowly drifting higher, prices slowly drifting lower. I would pay more attention to that. If you're looking at a chart that has sideways movement, the holidays probably won't do much to it. If anything happens to this, it might be like a subtle little breakout to the downside or a subtle little breakout to the upside. And so if you see something consolidating, set chart alarms, right? And it's okay to take this trade. A lot of times with lower volume in these holiday runs, what you tend to see is once the direction is established, the market just kind of drifts and there's no opposing side. So if it starts drifting lower, it might stay lower and actually create a little bit of a trend. And same thing to the upside. It might just drift and break and go higher. So if you're seeing some sideways action, set some chart alarms. Don't try to trade the chop during holiday times because it could be very quiet and nothing could happen. But if you're already in a trend, I wouldn't expect it to change. I would expect most of the trends to continue to go up. That begs the question of what we're looking at for the stock market. Here's the SPY opening up. We're at 449.87. Let me take a look at my Ultimate Options platform this morning. We're sitting right around that 450 handle. Real-time levels, I've got a 451. I mean, we're sitting right in between the 450 and 451. On the downside, maybe a 448. I would suspect today's going to be another quiet day. I'm looking at my call and put option volume sentiment. It's equal at 34 and 35. There's really no winner. So again, I go back to this trade. This is a tight one because I only did $1 butterfly. But for a max risk of $20, my reward is $180. So that's for one contract. If I take this this trade and it gets paid pretty well by the end of the day, make a $1.80, $1.90 net profit, and that covers the $1.44 that I'm in for all these trades. So that gives me an extra 40 cents on the week, which probably puts me up over $11.50 to $12 on the week. Not too shabby. I did have a kind of a public service announcement yesterday in the Equities on Demand trading room. I wanted to kind of recap that. So these are the trades that I've got going on. I just think that we have obvious gaps to the downside. I think I can delete these now. I do think that gaps should be filled. It's just what's going to be the driving factor. It's like, do we come into trading next week before the holidays and we have the market coming down here and then this starts to drift? It's possible, right? Like, in fact, if I'm a bull, I'd rather see price fill at least one stinking gap. I mean, this looks ridiculous to have a run like this. Now, I don't think that the lows are going to get taken out. I mean, after this type of rocket ship move to the upside, I don't think the lows are going to get taken out. Not anytime soon. That being said, though, I could see price drifting a little bit higher and then pulling back to a gap. We got to be mindful of that. But like I said, if I was a buyer, I would love to see at least a fall back into this first gap. This resistance becomes right. This level becomes future support, and then we see the market drift back up here. We post a new high for the year. We have previous highs back up here around 470 to 480, I believe. I think the S&P is around 5.5% off the all-time highs. So the highs were right around that 480 handle. From current price to the yearly highs are only 2% away. To the all-time highs are only about 6.6% away from current price. So it's close, right? Doesn't mean that we're going to get there, but I said this for the traders that are in my trading room. As we come into the next couple of weeks, next week I've got some travel time on Thursday, Friday, Saturday, Sunday. I know the market's going to be closed on Thursday. Wall Street still has expirations on Friday the 24th. I probably will not force a ton of trades. If I'm going to be sitting in an airport and on my phone, I don't need to have 3, 4, 5 positions running. I'll check the portfolio, check some currencies. That's pretty easy to spot check. But as far as like options and expirations, I'll probably keep that pretty quiet. So I might take a very low risk week next week and then get into the first part of December. I said the week we want to watch out for is coming up here, the 11th through the 15th. That's a big week for U.S. data. We have non-farm payroll on the 8th. We have CPI data on Tuesday the 12th, and we have FOMC with the final rate decision for the year on the 13th with Jerome Powell speaking. Good, bad, or indifferent. I mean, you can't tell me that, Jerome Powell's message was not necessarily dovish, and yet the market just used it as an excuse to rip to the upside. Seasonality, everybody. So, Powell's message is probably going to be the same. I listened to an interesting podcast this week. If you guys follow the Market Huddle out there, give a shout out to those guys. They do a great job. They have a long form podcast. Wait a minute, AEO is that actually going up? No way. Holy shnikes! You got to be kidding me. Well, that was a stock I wish I bought again at $10. Good for you, American Eagle Outfitters. Let's see how my Under Armour's doing. It's off the lows. Okay. Anything else? JWN is Nordstrom. Still a little choppy. How about some other retail? Nike pretty well off the lows. I mean, AEO, good for it. That's crazy. We had some exposure on this in equities on demand. It was just credit spreads, but man, what a great double bottom there around 1050. Now it's up 100%. Ain't no thing. Mark, what's happening? How you doing? Trish, good morning. Yeah, nice to see everybody. Okay, where was I? I was talking about the week of December 11th through the 15th. CPI on Tuesday, final Fed meeting. I was giving a shout out to the guys of the Market Huddle. If you follow them on YouTube, they have a great podcast that comes out every couple of weeks. Patrick and Kevin, and I don't know if they're checking this out. Awesome. I think they do a great job. Their interviews sometimes are their sessions are maybe an hour and a half to 2 hours, doesn't matter. I usually listen to it at 1.25 speed. Anyway, they have a shorter form called Market Huddle Plus, and this gentleman was on this past week, and a super smart bond fellow that came out of retirement to put together some pretty sophisticated instruments, trading bonds, treasuries, mortgage-backed securities, and he had an interesting conversation around Jerome Powell. Powell is a successor. I know it's years later, but is a successor under Paul Volcker, who is kind of the hailed as a king for taming inflation back in the 70s and 80s. I think that right now Powell's been so consistent with his messaging. I agree with what the podcast was saying, which was it's all about legacy. Jerome Powell does not want inflation to spike up, the economy to crash, things to get worse. I mean, for the most part, I'd say the Fed is like them, love them or hate them. They did a pretty good job of navigating all the crap we dealt with the last few years. It's things happen faster, sector rotations. I think this is an interesting fact. Most hedge funds out there hold positions from 3 to 5 years. That was the thing of the past. Now hedge funds are holding positions maybe 3 to 6 months. So the turnaround and the rotations and the in and out of positions happening way faster than ever before. So I just think that's more free-flowing information, more in-your-face decision-making, more short-term quant algo trading. Your black boxes out there doing a lot of work, and then you get these big pockets of liquidity. You get these big colluded trades where it seems like, I mean, if anybody is around here in Jackson Hole this year, things seem pretty squirrely. If you're around this last couple weeks for the FOMC November 1st, things were pretty squirrely, right? This week's CPI, pretty nuts. I mean, it was like a $6 gap and a $9 move from the day before. So we've had pretty big moves out there, and I just think that there's a lot of like concerted effort to make certain things happen. So long story short, check out. I think the podcast is great, and maybe you'll learn a thing or two. Yeah. What's up, Lee? How are you? All right, so feel free to drop in some charts if you want me to take a look at some stuff. For the most part, everything's going pretty well. It's been a great week for profit in the trading rooms. We booked some profits on the euro dollar. We got limited out for 225 pips. We've got some positions. I'm looking for pullbacks on the pound US dollar. I'm still long in the Aussie dollar, New Zealand dollar. I still like Aussie CAD, New Zealand CAD. I did some auto trading this week, so my robots did all right. Closed out for 941 pips. Pound dollar. We did cancel this trade because we started going up to 2,500. I'm still going to look for a dip to buy. Euro dollar, same thing. I'm looking for a dip to buy. We closed out this one for 225. Pound New Zealand. It was a profit protection week on this. Pound New Zealand, pound Aussie. That combination right there. Oops, I want to do this. Oops, right here and right here. So we closed out for 125 pips just to protect, which worked out well. The pound New Zealand ended up giving us about 300 pips of profit, so I forfeited some profits there, but we would have had about 100 to 150 pip drawdown on the pound Aussie. So all in all, pretty happy there was 2 wins versus 1 win, 1 loss, and whatever. It's fine. And then everything else has been pretty good. I like the positions we're in. Taking a look at the currency strength chart, I did have an update to my portfolio builder. I'm in a small drawdown. It's down like $100, and from the the balance, but I'm up, like my balance is up to like 1070 or 1075, which is slow and steady. I'm just getting daily rollover on some of these Swiss crosses that I'm in. There's still plenty of upside potential on the pips and the technicals, so I'm just going to continue to hold. I've got class today for Delta Trader towards closing bell 2 to 3 p.m. Eastern time. Class next week on a couple of things that I haven't taught in a while. Momentum breakout max, and we're doing something with a prop trader on Tuesday. So that's all through Market Traders Institute, and then of course the trading room per usual. Okay. Yeah, Market Huddle. So check out the episode. It's Market Huddle Plus, and the episode was called, I think it was called No Bad Bonds, Just Bad Prices, or Just Bad Bond Prices, something like that. I think the guy's name was Harry Tessman. Anyway, just the guy was ridiculously intelligent, and probably about 15 minutes of it, I'm like, man, this guy's talking circles around me. The bond world is very different, but what I gleaned from it was, like I said, comes out of retirement, joins a firm, they put together ETFs, and they build instruments that are very sophisticated for the everyday retail trader to actually trade. So you can get your hands on mortgage-backed securities, you can get your hands and trade treasuries and do it a lot simpler than some of the complicated ways that are out there. So yeah, Market Huddle Plus. Patrick and Kevin do a great job. A couple guys out of Canada that have been in the markets for a long time. And if somehow this, I don't know, if they catch wind of this, awesome. They just need to know that I'm a big fan. Okie dokie. If you got some charts, throw them in there. Amazon's at 143, a little bit of a pullback. I'm going to continue to add some, out of the money long puts just to make sure I have some protection in this 120 to 125 area. I've got a covered call out to December at 150 that I will definitely roll. I will go out further and I'll roll for credit. I'm going to try to roll. I mean, I don't want to lose a stock in Amazon, period. If we have some sideways motion, that's fine. I will probably do some more credit spreads and maybe some options around this to try to lower my cost basis. My break even right now is around 131. 131, and I'm trying to not really lose this until fresh highs. And even that is probably silly. If I just want to hang on to Amazon long term, I think I just hang on to it until it gets to $1,000. And whatever that looks like, I should just keep it in the portfolio for as long as I can. But there will be times where I'll peel off some positions. I've got, I think, 400 shares of Amazon in one of my portfolios. So it's a decent position, but it's probably one of the Mag 7s that still has a lot of upside potential, unlike the other ones. If you check out your, metas, look at this compared to the all-time highs. Google, Meta, Microsoft, I mean, we're very close to the all-time highs. And I'm not saying that we can't get there, but I mean, talk about a freaking comeback. I mean, Meta was down 60 or 70%. Wow, 76% just rips all the way back up. That's insane. And I do think that we could get there. Oh, by the way, I saw this last night on Twitter. Do you remember that hypothetical trade that we talked about in Equities on Demand? I know a lot of you that are in the room today. We talked about this trade. So right here, this would have been a freaking killer trade. Oh man, this would have been a killer trade. I mean, again, I'm a little bummed we didn't take it. I'm bummed I didn't take it, but I didn't expect Walmart to move like it did. This is a potential trade we talked about, which would have been a basically two strangles. It was just different money prices. So one's more at the money, one was out of the money. The 30 delta, we could have taken that trade for $2.72. It would have been a 172 long by a 165 long. So that'd be a long put. And this, by the way, would be opening up at around $10 profit. So you paid $2.72. It's trading for $10. That'd be a nice little $8 profit, which is a 3+X return. Not too shabby. Not too shabby at all. By the way, this is at all-time highs when it dropped the way that it did. And what's crazy is look at this nonsense. Earnings for Walmart was freaking positive. So what forced that move? I have no idea. That doesn't matter. This is why some of the stuff we try to do and the strategies we take, who cares if it's positive or negative? What I care about is was there volatility? So anyway, awesome setup. I obviously in hindsight wish we would have taken the trade, but it is what it is. We're up a ton of money this week, so it just felt like one of those trades where, yeah, we can take it. It would have been the bottom one. It would have been like the cheaper of the two. I just thought being up 9, 10, $11 for the week, I don't need to give back 3 or 250 or even a dollar. So, but man, that was such a good move to the downside. And that was way beyond. I mean, this is the daily chart. I mean, going from high to low, that's a $14 move on the week, and the average weekly, I have it right here. The average weekly ATR is $4.70. The earnings average is $8. So we nearly doubled the earnings average, and we nearly tripled. The weekly ATR. So that's why I didn't take the trade, because it was pretty improbable that we'd had that type of volatility. But nevertheless, it's right in front of us. The other one that was a hypothetical was Alibaba. And again, you can see the same thing. Holy shnikes, right? So we had a high of the week at 87, and we're down to 77. So that's a $10 move. The expectation was to be in the sixes. So we could have taken that strangle at 83, cost us $1.70, goes down to $77. That would be paying about $6. So you get in for $1.70. It's right now paying at $5.50 to $6 credit. You make a 200 to 300% gain. So, again, I didn't take the trades personally. We talked about it in class. I wasn't encouraging traders to take them. I just said these are the two earnings I would pick. When we talked trying to think on Monday during YouTube. Let me see if I have this. Yeah, we talked in YouTube. I talked in the morning session for Equities on Demand. This was the only earnings report I was interested in, right? And here's what's also crazy. Earnings came out before market on Thursday, and yet here's the big move. Why? I have no idea. Is that how it actually played out, or was there a delay in earnings? Because that is pretty crazy that you have an earnings report right here, Thursday the 16th before market opens, and then somehow we have a massive gap today, right? So you have a big gap lower. And by the way, Alibaba, just like Walmart, beat expectations on the earnings per share and revenue side. And yet it's just got smoked to the downside. What's nice about this, and here's another trade we have running in the background, we have a bear call spread that if price stays below $80, we are getting paid on that. Yay. So that's not too bad. Anyway, crazy stuff. Tesla reduced forward outlook. That's not a surprise. Pretty much every retailer is doing that. I mean, Walmart wouldn't be surprising. Every retailer, for the most part, that I've heard, read transcripts on the earnings calls, they're all cautious moving forward. And it's crazy that we like poked up to fresh highs, then we're dropping. Walmart's a huge company, right? I mean, Walmart is one of the largest revenue makers in the world, and I think Amazon is recently catching up. They were like 20 times different, now they're like 1.1 times different. So Amazon earnings catching up to Walmart to overtake is like one of the biggest revenue companies in the world. Donna, did you just get hacked? What are you talking about? Tesla. Let's take a look at Tesla. 229, and for the week, let's take a look at Tesla for the week. Pretty big candle, a lot of indecision. Low of the week at 211, high of the week 246. That's a big move. A lot of volatility once again. I'm wondering if we're starting to see the signs of maybe the market fading a little bit, because we got some big stocks here that are fading a little bit lower today. SPY's in the red. The Qs are in the red. The Dow's in the red. IWM probably pulling back to a gap area. Let's find out. Aha, my cat found the keyboard. There you go. IWM at 177.20. Look at this on the daily time frame. We had a nice long call that paid us a profit. I would like to see if IWM pulls back and finds a gap. If we find this gap or find this gap area, I'll look to see if small caps can have a broad market rally. If we come right back down, I'm still going to take a stab at going long on the small caps. If there's an outperformance in any way, shape, or form, if you want undervalued stocks, Russell 2000 small caps are the way to get it. The other option would be this. If you want to write these down, IWM I like for some decent returns. The RSP, that's the equal weighted S&P at 145. If we pull back into this area, again, pull back in this area. If we're gonna have some upside potential, there's more room to get back to the yearly highs, not the all-time highs, but the yearly highs. There's more room on the RSP, equal weighted. Same thing on the Qs. The Qs have had a nice run. If you go QQQE, that's the equal weighted NASDAQ. And you can see that the QQQ is back up to the same high. The QQQE is not. So if this one pulls back and has any upside potential, there's more gains on this than there are on the actual like QQQ and SPY where the market it's a large cap weighted and very biased and very concentrated. So these are a couple of instruments that I'll be watching. I'll type those out if you're interested. So I'll be watching IWM and possibly the IWX, which is the Russell 100 essentially, and then RSP, which is the equal weighted S&P, and the QQQE. These have more potential, but the disclaimer, the caveat is they require a broader market rally, and we might get it, we might not. It's hard to tell because this was a broad market effort. Everything went up, and I mean everything. Every sector was green. Everything went up. Stocks had a decent comeback. And I mentioned this yesterday in the trading room for Equities on Demand. We've had 2 broad market rallies this year. 2. And it was right here. It was back in May that carried us into July highs, and it was here with that FOMC, post-FOMC push. So we've had 2 broad market efforts, and it wasn't enough to get back to the highs as of yet, as far as equal weighted. But if you look at where the QQQ is, it's back up to the same highs. Again, this could be a spot where there could be some interest in shorting. There could be interest in some profit taking. And, getting to this high, especially the way that it got there with gap. It's not listed. Maybe that got filled. But certainly gap 1, gap 2. Let me just draw that again. If we have, this gap, and this big one from CPI, I think a little bit of a drift could fill. I don't know. I think it can. I think it will. In fact, I'd rather see it fill because if we come down slightly and there's a chance to buy this dip, then maybe this is what helps get the market back up to these highs and maybe even start to test or try to test the all-time highs. All right. That being said, if we all of a sudden, sideways, we have this big island gap and we break and close lower, then this thing could come back and fill not just, one gap, but also have this low, this high, come back and find some Fibonacci equilibrium, and then we'll see what the bulls or the bears are made of. So I just continue to have this outlook of I'm really not trading super long term right now. And the reason why is just being a trader has made us a lot of money. We've made pretty good profits on this run. It was nice to have a pretty easy directional play, but this was not a broad market rally. That's what I want you to understand. Like, this was a little bit of a broad market rally, and that's it. Everything else was AI and the Mag 7, right? Or the enormous 8. This entire run was lifted by recession fears were kind of contained. It became all about this AI hype, and the market just jumped on it. The Qs outperformed everything and everybody. The top 7 or 8 stocks are still up like 45 to 50% for the year. Everything else is like flat. For the most part, the S&P 490, right? We've got 490 stocks out there that are maybe up like 3 to 5% cumulative for the year. And you've got the S&P and the broader market up like 15 to 20%. So pretty wild stuff. And it's weird to have that much concentration, but what are you going to do? That's what we're dealing with right now. Okay, let's see here. It's 10 o'clock. Any other questions? Any other charts? We good? Let me spend some more time on Tesla. I didn't really give an outlook there. I just kind of looked at the week. We had a volatile week on Tesla, which is totally fine. Longer term, I mean, look, it's pretty simple. If we get above 300 bucks on Tesla, I'm long until we get to these highs. I think that we could have some more consolidation. We could have some slower movement here. We can end up rather, it may just trend in this area. But like I said, the big breakout would be up here. We clear this 290 to 300 handle. We're pretty open space on Tesla to take it back up to highs. So that'd be one thing I look for. But if this structure continues to correct, just don't force a bunch of trades. This could be a choppy, slow area with a lot of consolidation. So just be careful. As far as a bullish trade, this was a nice bull crown, and we started off. If this is wave one, this is wave three, and we're waiting for a wave five. That would be the push I'm looking for. So wave five technically is in the cards, but I think the clearance on that, rather than calling it now, is let's see if wave five can get some traction and get some bullish breakouts, and then we have, it'd be nice to have like $100 of direction. You can play that over, a 1 to 3 to 6 month time. And just be willing to hold. And the nice thing now is you can buy fractional shares, so it's not like you have to just dump and buy a $230 stock. You can trade options. You can trade partial shares. All sorts of stuff. Okay. Let's see here. Things are quiet today. For like I said, I'm going to be selfish today and say I hope price doesn't do anything. I hope it stays at 450. If it does, this trade pays. It covers all these debits and gives me another 40 to 50 cents on the week. And all in all, I'll be pretty happy. And then I'm going to kind of quiet things down a little bit, not for the trading sessions, not for the trading rooms, but just as far as quantity of trades, maybe expecting some lower volatility. And we'll see how things are priced out. If we get fair prices on options with lower volatility, then we can trade it the same way we've been trading. But if it's going to be like overpriced and we're paying for implied volatility that we're not going to get, then I don't want to overtrade. Try not to, at least. Okay. Anything else for today? If I have any new watchers in there, anybody's checking out this recording, before we go, we hit the thumbs up button for me, and I'll post in the Discord group. Let me find my channel right here and create invite. Here's the link. If you're watching for the first time, hopefully this works. If you're watching this recording and it doesn't work, that's okay. I mean, you can leave a comment for me in YouTube, and I'll send you a link that way. But just check it out. The channel server is Chris Pulver Trading, and if you're joining me Mondays and Fridays live for the YouTube session, I will post it every time. I've got some stuff I'm thinking about for the next couple of weeks and roll into the new year. I'm actually thinking about doing this type of session on YouTube way more frequently. Maybe even incorporating something daily, like a power lunch session. And I don't know. I'm thinking ahead to the next year. It's like how can I get out there to grow the channel? How can I get out there to help more traders, answer more questions? And I don't know. I'm thinking about it. So if I've got some community support, I'd like to know. You can leave me a comment. Obviously when I'm doing live videos and live sessions, or even the videos on my playlists, when you like and subscribe and you like the videos, that helps a lot and it helps my videos get seen. I think the only problem that comes from that is now I get a bunch of freaking imposters and scammers out there that are trying to be me, and they're sending messages on Telegram and Discord, and they're trying to private message people. And I'm telling you, I will not do that. Right? If you reach out to me and it's actually me, I will respond. But if somebody is reaching out to you as me, that's not real. I can promise you that I will not initiate or engage first. If you want to contact me, I'll respond. But if anybody's contacting you claiming to be me and trying to talk about trading and this great opportunity and blah, 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 it's probably some crypto scam. It's probably something else. Okay? How many rooms do I have? I run a stocks and options trading room Monday through Friday called Equities on Demand. I run a Forex trading room Tuesday, Wednesday, Thursday called the Flex Trading Room. And like I said, going into the new year, I might, in reality, I might try to monetize this channel a little bit. I might do like a Patreon thing where I accept some donations. If you're like, look, I follow this guy, he talks every day, and I'll give him a couple of bucks. That would honestly be awesome. I'm not trying to do anything crazy, but it would just be, it'd be nice to, kind of have a collective effort on a community, get kind of donations for my time, right? So that's kind of what I'm thinking going into next year is, how can I engage more? I would like my channel to grow. We're at like 6,400 subscribers from zero like a year and a half ago. So it'd be nice to get this up to 10,000 plus and really build a strong community and have a lot of great traders along the way. So just keep that in mind. If you help me spread the word, I really appreciate it. Okie dokie. All right, I'll let you go. Equities on demand students, I'll see you in the trading rooms. We'll switch over. And happy Friday, everybody. Have a great weekend. Great trading week. Really happy on the profits. If we finish up today at 450, that'll be pretty sweet. I won't complain. And we'll see what happens. Okay, sounds good. Thanks, everybody. And I'll see you on, oh, yeah, real quick on the schedule next week. Monday, we'll be back business as usual for the weekly outlook, Monday at 9:30 a.m. Eastern time for opening bell. There will be some holiday trading disrupted. I'll be traveling Thursday, Friday, Saturday, Sunday. I might post a video that I put together either Wednesday night and I just post it for a Friday session. But, you know, those of you that are celebrating Thanksgiving, have a great Thanksgiving next week. We'll talk in the trading rooms Monday, Tuesday, Wednesdays, business as usual. But I'll probably have a video posting for Friday, but it won't be live. I'll just be spot checking. But other than that, that's the only real disruption until we get into Christmas time and New Year's, where I usually take a little bit of time off. But I'll post videos, I'll post alerts. I'm still trading. The market never stops, so we keep grinding. Okay. Lonnie, hours of the room. Yeah, I'll talk about that right here. So Monday, so equities on demand, and I'll switch over. So equities on demand is Monday to Friday, 10 a.m. Eastern time. Flex is Tuesday through Thursday, 8:30 a.m. Eastern time. And each session I usually run for an hour and 15 minutes, and we just get to what we can. I have trade alerts as well. I have trade alerts only for equities on demand. I have trade alerts only for Flex. I have trade alerts only for Delta Trader. If you can't attend the sessions live, everything's recorded. But anyway, yep. So they run about an hour. Yep. Okay, sounds good. So check out the Discord channel. Love to have more people join. Like and subscribe. I love that stuff here for YouTube. Support the channel. Anyone watching the video afterwards, great. Thanks for being here live today. Happy Friday. Have a great weekend, and I'll see you on Monday. Thanks, everybody. Bye.